Right. What is going on, Discord family? And welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is September 22nd, 2024, year of our Lord. And we are back with another edition of the Top Down Analysis. Guys, first of all, I want to thank you guys so much. Even in our absence from live streaming, the channel is continuing to grow. You guys are continuing to sub to the channel. So I wanted to thank you guys from the bottom of our heart, helping us reach our end of year goal of well over 1,000 subs. We're up into 2,000 range. So thank you guys for that, and continue to use the coupon code. I would like to make a special announcement in regards to our Apex coupon code. We've officially gotten a personalized coupon code. So the code that you have been using, that weird code, you can continue to use that one, or you can use the coupon code that you see scrolling across the bottom if you want to help out the channel, and it's coupon code The Trader Shop. So if you guys want to help out the channel, that's one way you can do it. And obviously you can join the Discord if you like, but that's not why we're here. I just wanted to update you on that. Today we'll be going over the S&P 500, the NASDAQ, and the Dow Jones. A couple other things that I'm looking at in regards to things to support my thesis on the top-down analysis. I'm going to be breaking down pretty much the last quarter of the year. I'm going to tell you my overall thoughts, whether bearish or bullish. I'll just give you how I'm viewing the charts, and then we'll kind of get you guys out of here, all right? So as per usual, we'll start over here with all three instruments, right, on the monthly chart. Right, we'll look at the NASDAQ first because I know that's what everybody's trading. And we'll just analyze the previous month because we still have 8 days left, 8 days remaining in this month. This is the last week, trading week of the month. So, yeah, it should be pretty volatile with all the news that we have coming up. But if we look at the candle from August, we initially had that aggressive sell-off at the lows. Buyers bought everything back up, and now they're at a pivotal point where we need to get above 20,269. Now, looking at the wick that was created, all this wick did was come back into 50% of August wick. That's very bullish, the fact that it never made it all the way down to the lows. It came back into 50% of August's wick, and now it's pushing back toward the top of the wick, which leads me to believe that once it takes out these sellers up here, it's going to go back to all-time highs. If we look at the Dow Jones and the S&P 500, they're very, very similar on the monthly chart in regards to above the current structure. The NASDAQ is actually the one that's lagging behind, even though the tech sector is rallying like crazy. The NASDAQ is actually lagging behind the S&P 500 and the Dow Jones, but they have very, very similar structure to their development on the monthly chart. If we look at the wick, again, traded back into about 50% of the wick. On August, same thing on the S&P 500. And then we pushed up, and then we immediately found buyers got above the all-time high on the S&P 500 and traded well above the all-time high. This is the second all-time high break on the Dow Jones. Well, actually the third, because we broke above it back here in December. And then we got above that all-time high in April. And then we've just been pushing and making all-time highs basically every single month, which is another indication that we're continuing to be bullish. As much as I would like to be a bear, and you guys have seen all of the information out there about September, about the Fed pivot, right? All of that information is very accurate historical information. But the thing about history is it's past information. It's not information. It's information you can take in consideration, but it's not information that you can actually trade off of. What we see right now is the information that you should be trading off of. And right now, the market is bullish. I don't care what anybody else tells you, the market is bullish, right? And I'm going to further break down the thesis in regards to that. So I'm not trying to fight this. I'm just going to go with the flow of the market. It's strange. It's unusual. But I mean, the last 3 to 4 years of the market have been exactly that. So I would expect anything but abnormal. So let's look at the weekly chart on the NASDAQ again. We'll start with this beautiful double bottom after this aggressive push below the lows in April. August 5th was doomsday. Everybody thought the market was going down, including me, right? Instead, we pushed back above the high, came back down and retested the low and found buyers immediately in the September 9th week. Now we're continuing that rally here, trying to get above, again, that 235, 269 level keeps kind of showing itself on the monthly and now here on the weekly. If we can get above this high, the next level that we're going to find resistance is 20,556. before potentially trading above the all-time high. Now, what do I see from a bearish standpoint? Well, not really much, other than the fact that we could pull back into 50% of this weekly candle, which again, we'll discuss once we bring back some of our information. But if we just take this weekly candle here, not the small one, we take the bigger one, right? And we took a Fibonacci retracement, right? And we just took this up from here to here. Then I could flirt with the idea of a 19,214 tap. I don't think it's going to happen, but I could flirt with that idea, right? It just depends on what we do at these highs. And I'll break that down a little further when we bring out the 4-hour chart. I just want to get through the weekly and the daily, right? But over here on the weekly, for the S&P 500 and the Dow Jones, again, the stronger two instruments when it regards to structure, right? As regards to structure, the NASDAQ is behind these two instruments, which is the reason why I believe the NASDAQ is going to get above all-time highs, because these instruments aren't getting at the highs and then immediately finding buyers. And you can look at the weekly candle and you can tell that the wick is very, very small, right? That means that the buyers pretty much control this entire move, right? On the week. Same thing over here on the Dow Jones. The wick is really small, so that tells me the buyers were in control of not just this week, but the previous week as well. There's no wick on either of these instruments on the previous wick. That tells you that the buyers were very interested in continuing to buy this market, right? It's not to say that the market can't come down, and traditionally it does come down. But when we start to look at this yearly and all of these things, I want to bring in some pretty compelling evidence that we're going to keep going. So it's just my thesis, but let's drop down to the daily chart and kind of analyze that as well. It's going to be quite the same, to be honest, right? We're above all-time highs. There's really nothing to talk about on the Dow Jones except the Bulls tried to push, or the Bears tried to push price down on Thursday, but they were only able to get through 50% of Thursday's price. The daily fib ended up being, when I say daily fib, I'm talking about 50% of the previous day, but the daily fib ended up getting swept and then immediately finding buyers. Did they find a new high? Not quite, right? They didn't get above Thursday's high, but the day ended in pretty much an indecisive manner, but I would give the nod to the Bulls just because of the overall trend, right? If we look at the daily time frame on the S&P 500, it's more of the same. Very, very strong bottom wick, push into the previous 50% of the day before, getting above the all-time high on the day before, and then finishing near the all-time high as well. Again, is it bearish that we couldn't get above the all-time high? A little, but would you give the nod to the Bulls or the Bears in this situation, right? You have to go with what you see, and that nod has to go to the Bulls, right? If we look over here on the NASDAQ, again, this is why I say I think this week is going to be a week that the NASDAQ pretty much takes off, because if the NASDAQ can start to trade above 20,273, then it's going to have much more room to the upside, or I should say defined room to the upside, right? As far as structure goes, because it actually has liquidity that's already been acting as strong resistance above it, as opposed to the Dow Jones and the S&P 500 pretty much trading into new territory, right? Blue sky territory is what they call it, right? This is all price discovery up here, right? We can take an analysis and try to figure out where it's going, but we don't know exactly where it's going to go, right? So if we take a look, before we break down the 4-hour, I wanted to dive into the yearly candles, and I wanted to show you a little something that I was analyzing over the weekend, right? So if we take a look at the yearly candles, right? I'm not going to do the calculations that I did when the cameras were off. I just want you to take a look at the NASDAQ on the weekly, right? On the yearly, right? If you were to take the last, I don't know, since 2019, and you just take out the COVID year of 2020, if you take out the last 4 years and you divide it by 4 years, right? You got it by 4, you're going to come up with like a 40% number. And when I bring out my levels, you're going to see kind of what I did here. And all of my levels on the NASDAQ on the yearly projections are based off of that, right? If you take a look at the S&P 500, you look at these candles on the S&P 500 structurally, you can see we're doing nothing but going up. I mean, this is an index fund. It really only goes up, right? So, but the average that it goes up since 2019, the last 4 years, taking out the COVID year, is about 25, 27%, something like that, right? The same thing on the Dow Jones, right? If we just go over here and look at the Dow Jones on the yearly chart, right, we only go up, right? And when I bring out these levels, is going to shock you, some of the levels that the market could potentially go to based off the average, right? The average on the Dow Jones, I think, is like 25%, right? So I've taken the time to go through that. You can go through and fact check me or do whatever you want to do. But it was just a neat little trick that I was looking at, right? Obviously, I'm going to play the levels that are in front of me, and those are the levels that we're going to discuss right now. So let me bring back all the levels here. We'll bring back the top-down analysis for each and every one of these instruments, and then we'll break it down. Then we'll go through some of the news catalysts that are coming up, and then I'll talk about some other things that further support my bullish thesis, okay? So looking at the S&P 500 first, we'll blow it up here so we can get a better look. We can see that we had an all-time high break at 57.82, I think it was. Wait, yeah. Anyway, we'll just put the all-time high at 57.97.50, right? That's the new all-time high. And after we broke the all-time high, we did sell down, but again, we found buyers immediately. You can see we have this 90-minute demand zone, which essentially for the ICT traders out there, this is essentially a 4-hour fair value gap that we're tapping back into here. And we're immediately finding buyers, right? Like we're not breaking back above highs, but we're essentially just ranging. And that's what this chessboard box is. If you want to know what that is, just join the Discord. I'll explain it to you further. But essentially, we had a range day on the 4-hour, right? So what am I anticipating at the low when we have an aggressive sweep of the lows and then a range inside of that range? As long as we stay above 57.33.75, and essentially this consolidation right here, this is the consolidation that brought this new high, right? As long as we stay above this consolidation, I'm anticipating the market moving higher. It's just as simple as that for me, right? Like as long as we stay above 56.75, the market is going to continue to move higher. It's going to use this area as a bounce, right? And then it's going to continue to push. But right here, as far as the dealing range that we're currently in, as long as we stay above 57.33, I'm anticipating price making another push toward all-time highs at 57.97. If you're familiar with how the market reverses, you know it reverses in a 3-man pattern. If we're going to dump, then this would be a signification of a left shoulder. You would anticipate the market running this high to put in a head, coming back down and taking out the low, and then coming back up one more time to retest the right shoulder. I don't see that formation, right? As of yet, this could be a left shoulder. This could be a head. In order for this to truly be a left shoulder, I would need to see us trade below 56.75. If we're going to be bearish, that's what will do it for me. We trade below 56.75, and then we come back up and fail to break back above 57.36. At that moment, I will know that the market has broken structure on a higher time frame, and now I'm looking to be bearish. Until that happens, the move is to the upside. Now, what levels am I looking for to the upside? Well, I haven't drawn anything but the yearly projection, which is 24%, 24.87%. I'll share a couple other levels with the Discord a little later. But for now, essentially, this is what you need to know. Every single week that the market goes up on the S&P 500, the average is between 2 to 3%. If you take a look at the weekly candles and see what 2 to 3% is, you'll notice that we're going to be looking, right? If you just take and usually I just go from here, we'll do it real quick. Usually I go from the 50% of the candle, right? If you just go up 2% from here, right? Just a rough estimate. We're looking at 58.47, 114 handles. That's not out of the realm of ordinary, right? I know it sounds crazy, but the market's been sounding crazy all year, right? If you look at the weekly candle, 2% is 54.87, and then 2% to the downside would roughly put us at 56.18. Hence the reason why I said on the higher time frames, a break below 57 or 56.35 would indicate us selling down. So as long as we stay continuing pushing up, I'm going to be looking to be a bull, right? Not necessarily holding bearish positions for too long, right? So let's move over to the NASDAQ. And again, this is a little bit different, right? In a sense that we have bearish areas to target above us, which to me makes the NASDAQ very intriguing to play next week, because I'm a supply and demand trader. And when I can find supply areas to trade off of, it kind of gives me a ceiling, right? And then the demand zones give me a floor, right? So one of these three ETFs is not like the other one. and currently is the NASDAQ, right? So what I will say is this high here is the high that brought these lows, right? But it did not break these lows, okay? We're already above the high that brought these lows. Instead, when we came back down here, we found more buyers. But people who are unbeknown to market structure, when they come up here, they're going to be looking to short the market. They're going to be anticipating the market coming down and breaking these lows. It's not something that can't happen. It's just that structurally, the next thing for the market to do is to put in a higher low and a higher high. A signification of that would be once the market starts to trade above 20,257.50, I'm going to be looking for break and retest targeting 394, 567, and then 742. Above 742, we should find some resistance because that will be the sellers that came into the market from July 15th. I'll be looking for shorts at 20,742, targeting these resistance areas that will now be operating as support. And then ultimately, once we take out this liquidity, I'll be looking for a push into 21,216. Much easier to find targets when we've already been up there, right? As opposed to guessing at targets in no man's land. To the downside, what am I looking for? I'm looking for this consolidation to hold. If it doesn't, I'll be looking for the market to tap back into 19,797 through 75. If the 1 hour fair value gaps hold there, I'll be looking for longs into this area. A break below, just like on the Dow Jones, a break below this consolidation or this ultimate wick here at 19,418 will signify a bearish territory, and the market will be breaking what ICT traders will be setting up for a breaker, right? We'll be breaking through this level, and then I'll be anticipating a retest of 19,843, only to come back down and then start testing the 19,000 levels and potentially targeting 18,570. I think that would take a little time, but if we're ultimately bearish, the market can get there really, really quickly. So those are my bullish and bearish levels on the NASDAQ. Now let's switch over to the Dow Jones, the other instrument that's in kind of no man's land in regards to market structure. Again, I have weekly bullish levels on the Dow Jones at 1.8%. It's the instrument that I trade. So of course I have marked out my levels on this one, right? So 42,953 to the upside, and then 1.8% to the downside, 41,809. If you're looking for where I pull these levels from, it comes from 42,183, which is 50% of the previous week. That's why I usually pull my projections from, because the market has a tendency to pull back into 50% of the weekly. So this number could be skewed a little bit upward to the downside, right? So targets to the upside is 42,953. And then my yearly target projection is 47,050 at 22.74%, which is the average of the last 4 years, all right? Currently, we're in a range, so I'll be looking to trade inside of that range between Thursday's high, Thursday's low, Friday's high, Friday's low, essentially dancing around into this zone until I can catch a breakout in either direction. Below us, we have a 3 hour fair value gap, which I'll drop down to 3 hours so you guys can see that I marked the top of the gap, not necessarily the bottom of the gap, but this is a nice area between 42,204 to 42,134 that I'll be watching for price to bounce off of if we start to trade down. If the buyers feel that they don't need to go down there, then I'll be looking for a break above the all-time high at 42,583 and looking for a break and retest into 42,953 ultimately, right, before the end of the week, right? If we start to trade down, it's the same thesis that I have on the NASDAQ and the S&P 500. This consolidation here will be the signal that the bears are taking over. We get below this wick here at 41,857, which again lines up with my weekly bearish projection. We get through these levels, and then I'll be looking for a retest into 42,274, basically creating that head, the shoulder, and the other shoulder to take the market down even further. We get below 41,539, then it's going to be a very, very smooth ride all the way down to these wicks here at 40,436. Right, so that's my bearish and bullish projection. Let me give you some reasons why I'm more bullish than bearish, right? First reason, we take a look at the stock market, right? So we'll share this screen here. This is the Mag 7 minus Tesla, because I'm just not a believer that it's part of the Mag 7 because the market cap is too low, but that's just my personal opinion, right? So if we look at the weekly on the Mag 7, right? I'm going to show you something that, I found interesting. And I think it's, ironic that the candles are in black and white, because that's what I'm going to call the information. It's just black and white information. Do with it what you will, right? However, Apple, all-time high, 237. Amazon, all-time high, 201. Google, 190, 194. Meta just created a new all-time high last week at 563. NVIDIA, 141 is its all-time high, is currently at 116. Microsoft, 468, right? And the list goes on and on, right? Why am I showing you these all-time highs? Well, I'm showing you the all-time highs because the all-time highs have been getting broken all year round, right? More importantly, I'll show you something that I found interesting, which is the yearly projection on each and every one of these stocks, right? The yearly projection for Apple is 246.24. That's $10 away from where it is currently, right? We go to Amazon. The yearly projection for Amazon is 220, right? Now, is this 100% where we're going? No. Has it been accurate all year? Yes, it's been accurate all year. So why would I start to distrust it now? Okay. Now, 220 is where Amazon is projected to go, right? Amazon is a big player in the Dow Jones. Remember, I told you the Dow Jones has a lot more room to the upside, and it could be because Amazon has a ton of room to the upside, right? We're looking at almost a $30 move left on Amazon. We go to Google, right? We go to Google. 203 is its projection for the year. Google is currently trading at 163. If that's true, this thing's going to rally another $50 to the upside, right? And I don't put nothing past this bullish market, all right? So if we go over to Amazon, we go over to Meta, right? Its target, end of year target is 572, $12 away from where it is right now. And then the big dog, right? In 53 days, 30 to 53 days, all of these instruments report, right? Which could be another catalyst to either, stop the run or continue with this rally. NVIDIA's end of the year price target is 149.49. We're currently at 116. We could rally another $30 from here. Again, I'm not trying to turn you into a perma bull. What I'm trying to do is support my thesis as to why I'm ignoring the stats, the historical stats of Fed pivot, we dumped 35%. I'm ignoring the historical facts of September is our most bearish month ever. Newsflash, we have 8 days left in September, and there has been no sign of bearish activity. So I'm just talking about what the market is currently giving us, and I'm showing you the thesis that supports that. Last but not least, we look at Microsoft, and it's currently trading at 435, and its projection for the end of the year, which is 3 months away, is 497, a whopping $60 away from where it's trading right now. Right. Then we have the fear and greed index. Again, I take this with a grain of salt because this is just really operating off, straight emotion, but it is in greed territory. And every time we've gotten in greed territory this year, I'll note that usually the bears come in and slap us back down to the other side of fear. It'd be interesting to note how we finish this month, because this month is historically bearish. The market has gotten all the information that it needs to actually dump in a historical manner. But let's see what next week brings us. In regards to next week, let's drop right into the news catalyst, right? And we'll take a look at the news for the week. We are not short of any volatility this week. 4 out of the 5 days pulling into this week have red folder news, which I absolutely love because I hate when the market consolidates and goes absolutely nowhere. That usually happens when we don't have strong fundamental news, okay? First day, starting on Monday, we have flash manufacturing PMI, and we have Fed Bostic speaking before the market opens. We roll into Tuesday, we have consumer confidence, more red folder news at 10 a.m., right? S&P composites and another FOMC speaker. I think these speakers are going to be very relevant this time around, just because the Fed just spoke and the Fed just decreased the rates. So the market's going to be keying in onto if the Fed broke something, because historically when they drop like this, 50 basis points, it's usually because they broke something. So people are going to be trying to key in on every word these speakers are going to be trying to say, right? Wednesday, the only day we don't have red folder news, but we still have crude oil inventory in new home sales. As a US 30 trader, new home sales really makes a difference for me. So this is good for me. This is industrial news. I'll take that, right? We go into Thursday and we're back to more red folder news, our usual suspects, unemployment claims, USD, or durable goods, final GDP price index, which I think will be important because it'll be revised from the last time we heard it, and then a plethora, right? A plethora of speakers, including the big dog himself. At 9:20, he's going to be speaking. But again, where and what he's speaking about, read the description. Due to deliver pre-recorded opening remarks at the U.S. Treasury Market Conference in New York. This will scare the market, but I think it's going to be one of those nothing burgers because we've already gotten all the information that we needed from Jerome Powell, which is we're dropping interest rates, we're slashing interest rates. That's all we really needed from him. Nothing else really matters at this point until something else changes in regards to the data. And then finally, we end the week with core PCE, price index month over month, right? Goods trade balance, and then revised consumer sentiment, which is a very, very good catalyst for 10 a.m., right? So ultimately, guys, bullish, bearish, it doesn't really matter. What I will tell you is I do top-down analysis for, I'm just a nerd like that, right? I love to do a top-down analysis. I love to see which way the market could potentially give a prediction and all that good stuff. But at the end of the day, the rules that I live by have nothing to do with top-down analysis. What I would encourage you guys to do is always manage your risk, right? Have a pre-market and a post-market plan on what you plan on doing, and make sure you're doing the same things on every day. If you do that, you will be successful as a trader. But most importantly, please make sure you come back and check us out for all of our videos and top-down analysis in the future. Don't forget to tip the barbers, aka hit the like and subscribe button. My name is T. Hobbs. This is The Trader Shop, and we'll catch you guys on the next one, man. Peace.